reach the product. Why is that? Because you have credit insurance that says you're going to be paid when you ship the product. So it dovetails together. The U.S. government will guarantee to the bank a loan for you to manufacture the product, and that loan is also collateralized by the insurance policy from the U.S. government. So you have a U.S. government guarantee from both sides. It eliminates write-offs. Write-offs don't look good on your financials, and banks don't like to see them. If you have credit insurance, then you don't have to worry about write-offs. You also don't have to worry about the possibility of going bankrupt because a very large order overseas is not paid to you. Finally, it secures the second most fluid asset after cash. Most people, most companies insure their cars, insure their people, insure their buildings. The cash is insured through FCIA, but they don't insure their receivables. So credit insurance enables a company to insure this second most fluid asset. There are two types of credit insurance, private sector and government-backed. And the difference between these is that private sector is obviously profit motivated, and the government-backed is motivated by exports, motivated by jobs created by exports, and motivated by receiving dollars back. Under the private sector, you have a minimum premium, and the smallest minimum premium under a private sector policy is $5,000. So what that means is if you project to do $2 million in sales for next year, you're buying a policy for $2 million in sales. If you only do $1 million in sales, then you've actually still bought a policy for $2 million in sales. So private insurance requires that you estimate up front what your sales are going to be, and then you pay a premium based on that. Now, private insurance will insure domestic as well as international sales, whereas XM will only insure international sales. Another difference in private insurance is that you do not have to ship from the United States. I have a client that ships from all over the world, and they have private insurance because they will, for example, sell from China to Europe. They will sell from South America to Korea. And it is necessary for them to have a private insurance policy so that they can get shipments covered that don't ship from the United States. Under the government-backed, which is the Export-Import Bank of the United States, you have a U.S. content requirement. Now what that means is if you import product and turn around and re-export it without adding value to it, it's not going to qualify, because it does have to be 51% U.S. content in order for the U.S. government to support that sale. It also does not support sales to the military. If you sell products to the overseas military, for example, the Army in Colombia or in Israel, then you're going to have to use private sector insurance because the U.S. government will not support sales to any foreign military. U.S. government is backed by full faith and credit of the U.S. government. So XM Bank insurance is very powerful when it comes to banks and borrowing against it. XM also approves your buyers in advance. They don't like for me to say they're your credit department, but they train you to be a credit department. And the way they do that is requiring you to check out trade references, requiring you to run credit reports and become familiar with credit reports, requiring you to get financials and become familiar with financials. Ultimately, XM Bank is going to approve most of your buyers. However, it is an education for a company, and it does establish a very good credit procedure for you in doing international business. XM also allows single buyer coverage. Some private sector does not. There's medium-term coverage that will allow you to sell products that may be repaid over a 5-year period, 4-year period. Your Your buyer will repay semi-annually, and the exporter gets cashed out up front. It also allows a bank, either a U.S. bank or a foreign bank, to make a loan to your buyer in order to buy your product over a certain amount. And it does have letter of credit coverage. You remember when I said that confirmation of letters of credit is very expensive for some countries? You can actually get letter of credit coverage from Ex-Im Bank instead of confirmation. And it's very, very cheap. In fact, the banks that confirm letters of credit are insuring them with Ex-Im. Another huge difference between private insurance and government insurance is that you don't pay any government insurance until you make the shipment. What that enables you to do is never buy more insurance than you need. It's always a direct cost to the sale. So if you estimate $2 million in sales and you only sell $1 million, you only pay for $1 million because you only pay the premium after you ship. It allows your salespeople to go to a trade show, for example, and say, we may be able to sell you on open account terms. What we need from you is a few trade references. If you can get those to us before the show's over, we'll get started on it as soon as we get back. That frees the salespeople from making big messes when it comes to quoting payment terms, because you do have the ability to offer open account terms with a guarantee of payment. A lot of people ask me, well, how much does this cost? These are the rates for a small business policy with Ex-Im. 1 to 60 days costs 55 basis points. So what that means is on a $10,000 order, you're going to pay $55 for the credit insurance. Very cheap. If you need to give 61 to 120 days, the rate is 90 basis points. So on $10,000, you're going to pay $90 for the credit insurance. The farther out you go, the greater the risk of non-payment from your buyer. So from 121 days to 180 days, it is 1.15%. You're going to pay $115 per $10,000. Most products will only go out 180 days. However, if it's capital equipment or other selected products, Ex-Im will allow you to go out 360 days. I mentioned letters of credit, confirming letters of credit. The cost to confirm a letter of credit is 0.03. So on $10,000, you're looking at $3. Very cheap. The site draft against documents, where you're only paid 60% in the event of default, does only cost 20 basis points. So in that case, you've got a situation where your buyer hasn't accepted the goods, they still belong to you, you can get 60%, and the cost of the insurance is 20 basis points. So Ex-Im is actually very cheap. The question that I get is, how does this compare to the price of private insurance? And I say to you, I really can't compare the two, primarily because private insurance you pay based on what you project, and Ex-Im you pay only on what you ship. A lot of times you will be able to get a quote from Ex-Im that includes a deductible. Private insurance always includes a deductible. Sometimes the rate is lower than this, sometimes it's higher. It just depends on the product and the country that you're selling to. So it's very difficult to compare the rate of private insurance to Ex-Im insurance. Credit insurance, I have a client that says credit insurance is insurance that allows him to sleep. So it is insurance for insomniacs, because it allows you to sleep at night. That is the end of my first presentation. Thank you.